Happy Friday, traders. It is 8:01 a.m. Chicago time on Friday the 13th. Friday the 13th. Is it lucky or unlucky? What do you believe? It's Friday the 13th. This is episode number 2233. I'm coming at you from my home trading station. A mic check would be great. I actually don't have I have not connected the primary mic this morning, so hopefully this will get us by. Just don't have the time to do it this morning. There's a lot going on. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's how the markets are positioned this morning. Okay, thanks for that. We'll just reduce it a little bit. Doesn't hurt to reduce it. Here's where how the market's positioned this morning in our convergent trading pre-market summary sheet. Again, if you don't understand any of the acronyms or whatever, please go to the link at the bottom right in the red box where it says glossary-terms. Go to that link, and you'll have the information there. So, okay, I've adjusted the mic a little bit down, so there we go. It's actually pretty far down. So that's where we stand this morning. We have a risk on sentiment, and we did finish relatively strong. And you think, well, wait, we settled lower. We actually settled from 39.32 or 31 from the prior day to like 39.27.75 yesterday, or 39.27.50. But actually, the performance on that close yesterday in the S&P was relatively strong. I was expecting a pop higher today, and it did take place. There was a lot of bargain shopping yesterday in the main issues, in the bigger but beat down issues. We did see them get supported. We did see really strong buying on the tape on the close. We'll talk about that. We saw that in basically across the board. The Russell was relatively a lot stronger yesterday than the others. So this morning, the Nasdaq's taking a pop higher, so there's money flowing into those large caps. Here's the overall pre-market heat map. You can see Soft is getting a pop, Apple's getting a pop, Google, Amazon, Tesla really pushing big this morning. Nvidia, these are the FANG stocks. Netflix is supposed to be a part of that, but I don't know if it still is after the last earnings. But it's the bigger boxes represent market capitalization. So in this chart, the bigger the box, the bigger the market capitalization, and you can see the monsters, the big Goliaths in the market, and they're all green. Okay, so this is a market that has a pretty good base to it, unless we sell off, and that doesn't bar the market from selling off as soon as we open. Unless we sell off on the open, it is a relatively strong indication that the market's likely to flow upwards. Crude taking a strong pop higher, trading at $1.09. Trading at $1.09 this morning, breaking out to the upside, getting pretty good flow there. Gold has come off. Gold's really struggled to hold on to the 2019 50 area and has been flowing downwards. Copper, the same. We're seeing a pop higher in crypto. Crypto got hammered yesterday on some really crazy stuff going on with Luna and Terra, and we're seeing kind of selling across the board over there for the last few days. But this morning we're seeing a slight pop higher. Looking at what's ahead, the key number this morning is that's ahead of us is the Michigan sentiment. We got some numbers out of Europe. The inflation rate out of France came in line for both year-on-year and month-on-month at 4.8% versus 4.8% expected. The month-on-month came in at 0.4 versus 0.4. Industrial production in the Eurozone came in worse this morning at negative 1.8%. The forecast was negative 0.9, but the consensus was negative 2. Didn't get a reaction there. This morning we got in the U.S. we got import prices came in at 0% import prices versus 0.6 consensus, and then the export prices at 0.6% versus 0.7% consensus. Again, the big number today is Michigan sentiment. This is the prelim number for May. This could be a mover. The expectation is 64 at 10 o'clock, 64 at 10 o'clock. And then we have Fed's Kashkari at 11. The Fed players, the Fed presidents have been definitely hitting the runway this week, talking up a big game. So that's where we are. A quick review of yesterday. So I posted this yesterday afternoon, not to pat myself on the back, but I posted this as a demonstration of why we have a plan and why it is so important for traders not to get so caught up in their little, the plans to get short, I got stopped out, then I got short again, I got stopped out, none of this works, but to keep an eye on the bigger picture. So yesterday we talked about this is an image of yesterday's video, pre-market. Yesterday we talked about the strong potential of a pullback down into the 38.80, 85 area or so, and I was looking for a push into 39.50. If it gets to 39.50 and we break through, then the pullback gives us a long in the 39.54 area against the overnight high for a run to 4,000. That's the primary scenario. I was anticipating, as you can tell, the reversal that's happening today. I was anticipating that yesterday. What actually happened is scenario two. Scenario two had us looking at 39.20 as a first area of resistance, but really you could see right here, it's either going expected to turn there or there. This number, this kind of lavender colored line, is the key over/under stock zone. Very important price. The expectation is it would test 39.50, and then fail from there, and the trade is to catch a short after the lower high. So we're giving up price for more information. So we're taking on price risk, and then the goal is to watch it run down into the 38.54. So that's the key number we were after yesterday. So a trade from 39.54, 39.50 down to 38.54. It's 100 points. Again, generally trades right now are taking on about 4.5 points of risk. This is very tight, but I use order flow in order to help reduce that risk. The bottom part of this picture is what actually happened. So this is yesterday up to almost the close, 2:10 p.m. my time. Instead of doing it on the screen here, I highlighted this really with the intent of showing it here today, this morning, with annotations to show that, here we open, this is the open right here. This is the open right here, right where the RTH numbers start. So we have an open auction, we test back and forth, we get down into this 38.70, whatever, 2-ish, and then we finally drive higher, and we push through this lavender color. This doesn't mean we look to get short. We offer out the 39.54, 39.50 and hope for the best. What we're looking for is for the market to push through, come back, and fail back in. So a lot of waiting, and then we finally test the mid, which I wasn't a participant in. We finally test the mid from above, the full session mid. We push higher into this zipper cluster. We have very defined range for risk, and then the trigger short is on the break lower, and then look for it to break down and out of the prior day's range. This is the range low. This little dashed green line is the prior day's low. Is around well, that's the open actually. The low is up here actually. So we broke out of the we pull back to mid, push through, try to catch the break of the low again, and then look for the 38.54 right down here. That's the green stock zone that you see here. That was the target of yesterday, and it worked out beautifully. It doesn't always work out this way, but very orderly sell-off. Very orderly sell-off on the way down. This just is explaining, and one of the things you should take away from this chart, by the way, is how murky and messy it is. It's kind of messy. It's not as clean as I draw the lines. It's a lot of back and forths and a lot of levels that get hit or not. And that's just the nature of it. And the thing to do here is to just get used to the fact that it's always going to be this way. So that's basically the action yesterday. Let's jump into our review segment. Jump into our review segment here, and essentially this is yesterday's RTH right here, right? So it's these boxes, this box and the blue profile. Look at what's going on with this delta. The delta was negative on the open, and it kind of bounced around, and then just massive prints, very strong delta on the close. We'll look at the delta, relative delta on Edge Pro X in a minute. But very strong delta on the close, and pretty good participation there. Didn't see the very large lots playing, but man, there was a lot of lifting. And again, we finished with a delta of plus 16,000 contracts or more. We come back in, pull back a little bit, and really all we've done is impulse and consolidate all the way to the top. We just shifted the point of control up here. We have what looks like, see this profile? Hang on, look at this profile. Look at that profile. That is one funky looking point of control, right? So that was likely an iceberg. For those of you who are with Convergent, our study hall yesterday was icebergs and collisions. That was very likely an iceberg that cleared through, busted out, and has come back in, has traded enough to move the point of control up here. The point of control was, the overnight point of control was 39.75 all along. And this is likely to stay this way until we open. I'm expecting the market to kind of sit around here into the open. We're well ahead of VWAP. We're well ahead of mid, the full session mid, and we're opening above. We have not opened above in a while. What is the key thing the market has done this morning? Let me give you a hint. What is the key thing the market has done this morning that we need to take stock of? I'm going to give you a second. It's allergy season. I'm going to need to blow my nose, but I'm going to give you a couple of seconds. What is the most important thing that has happened this morning that gets our attention? Very good. Many of you have gotten it. One-time framing. The trend on the daily has been broken. So this is a consistent one-time framing down. Remember, one-time framing down means doesn't have to put in a lower low, but it has to put in a lower high. The auction cannot exceed the prior high, cannot trade above the prior high. One-time framing down exists in a daily, has existed in a daily, weekly, and monthly. And now we are trading above it. So this is a really important piece here. This is the first time in a while, really for the month, since the beginning of the month, that we have broken the one-time framing down and are taking out. So, and that, and please pay attention, that the fact that we are reversing the trend by taking a one-time framing out, this high from yesterday, 39.61, which is approximately 10 points below us, is being done on a profile that is what? What is the quality of this profile? What is the quality of the profile here coming in from yesterday? Come on, come on, come on, quickly, quickly. There is like a 3-second delay. Should be able to answer more quickly. So this profile here is nice and balanced. This is a nice and balanced profile. This is a so on a nice and balanced profile, what starts to matter? What starts to matter? Value area. On a multi-distribution profile, we don't really use that value area, but we've got, so if the market pulls back and gets into 61.75, we're expecting it to bounce at the value area high. So we're expecting the value area high to hold here. 39.37 coincides with a couple things. And we expect the market that if it breaks through, it is likely to fall to 39.37. And remember, the high is 61. This may look like not much room, but that's a lot of room from 61.75 to 37. A lot of room, and we're expecting it to bounce. And if the market breaks through the value area high, what is it likely to do? What is it likely to do? Come on, come on, come on, more quickly, faster, faster, faster. It is likely to check the point of control. So the point of control comes next. The point of control with volume from yesterday is, whoa, I got this wrong. The point of control from yesterday is, what is it? Let's see. Looks like 38.96. I've got it wrong in my notes. 38.99, 3900. So that becomes the next key area to test. And if the point of control doesn't hold, let's go back to the TPO chart. If the point of control doesn't hold, then the next key area to aim for is value low. This kind of thing where we open above a prior, if we open above a prior, this structure here will get a lot of activity today. We open to a prior balanced balanced profile. If we are really paying attention on whether or not the market can break in. If it breaks in, we have some really solid risk reward setups here. And I'm going to tell you that there isn't much that's more important than risk reward in this game, because you can trade randomly, but given the proper R factor, you have a chance to survive. If you don't, then you have no chance. So if you're trading randomly and you're doing a 1R, you're risking as much as you're gaining, it's a very, very rough game. This is why scalping is very, very hard. You have to be very, very accurate. But here we have some structures that are very, very clean and clear in my opinion, and we have a serious reversal of the trend. There's likely to be some fireworks today as we open. So if we drive back in, I'm going to be very, very attentive to whether or not we get back through the 61.75. And if we do, then I'm expecting a reaction at 37. If it looks really weak, then I'm looking for any pullback below 61.75. So we might go to 61.75, break through, get down to 31.55, pull up to 39.60, and I'm going to look for a short 39.60, and the target's going to be 37, and expect some support there. If it doesn't hold the 37, then I'm looking for the break of the 37, a pullback into the 37 for a trade into the 3900, and so on and so forth and so on and so forth. If you traded just that way, you wouldn't be trading all that often, but they would be pretty freaking solid trades. Anyway, I'm going to leave you with that. I don't have time to draw lines or anything. I need to head out. But mind your risk today. I'm expecting pretty orderly trading. I'm expecting two-way action today. and we're likely to open in an open auction out of range. So pay attention on the open. My suggestion to all of you, is to just wait out the first 15, 20 minutes. It's incredible how much data you can get in the first 15 and 20 minutes, and how you can align yourself with the market versus trying to catch that first move. The days where the market opens and drives right away, which require you to participate right at the open, those days only number in the, I don't know, my guess is the 10% of all days. You really don't and shouldn't participate right at the open. Market on open orders come in. It is the territory of the higher time frame, investors, trade desks, investment funds, and so on. Um, that's their domain. That first 15, 20 minutes as they put positions on with MOO orders, stay out of that. It's just noise and it's not fun to trade. Okay, so you have the whole day in front of you, and it's nice to open your trade with a better understanding of what the market's doing and with a clean slate. If I can offer you anything that may change the way you trade here, that would be one of the things. Good luck.